Accounting Standard 24. This standard is effective since 1st April 2004. This standard is applicable to enterprises planning to discontinue the operations of any particular segment by selling in single transaction, by demerger, by disposing in piecemeal, or by terminating through abandonment. The disclosure should be presented in the notes to the financial statements on the face of profit and loss statement. It does not include amount of pre-tax profit or loss from the ordinary activities due to discontinuing operation. Accounting Standard 25. This standard is effective since 1st April 2002. It deals with the interim financial reporting of statements. The components of an interim financial report are condensed balance sheet, condensed statement of profit and loss, condensed cash flow statement, and self-explanatory notes. Accounting Standard 26. This standard is mandatory from 1st April 2003. It relates to the intangible assets such as expenditure on advertising, training and startup cost, research and development activities, patents, copyrights, trademarks, and goodwill. The financial statements should disclose the useful life or amortization rate. The amortization methods are the existence and carrying amounts of intangible assets whose title is restricted, the amount of commitments for the acquisition of intangible assets. Accounting Standard 27. This standard is effective from 1st April 2003. It deals with financial reporting of interests in joint venture. A joint venture is a contractual arrangement whereby two or more parties undertake an economic activity which is subject to joint control. The venturer should disclose the aggregate amount of contingent liabilities, share of contingent liabilities of joint ventures themselves, capital commitments of the venturer, and share of capital commitments. A venturer should also disclose the assets, liabilities, income and expense related to its interests in its separate statements. Accounting Standard 28. This standard is mandatory from 1st April 2004. It deals with the impairment of assets for enterprises whose equities or debt securities are listed on a recognized stock exchange, and all other commercial, industrial and business reporting enterprises whose turnover for the accounting period exceeds Rs 50 crores. In respect of all other enterprises, the accounting standard comes into effect from 1st April 2005. The objective is to avoid impairment loss of asset, that is, the carrying amount of an asset is not more than the recoverable amount of the asset. An asset is carried at more than its recoverable amount if its carrying amount exceeds the amount to be recovered through use or sale of asset. Accounting Standard 29. It is mandatory from 1st April 2004. This standard aims at ensuring appropriate recognition criteria and measurement basis to the provisions and contingent liabilities, contingent assets. It is applicable to the enterprises whose equity or debt securities are listed or is in the process of listing, banks, financial institutions, insurance companies, all enterprises whose turnover for the immediately preceding accounting period exceeds Rs 50 crore, all enterprises having borrowings in excess of Rs 10 crore. A provision should be recognized when an enterprise has a present obligation because of past event. Outflow of resources will be required to settle the obligation. The amount of provision should not be discounted to its present value. An enterprise should recognize a contingent liability or contingent asset. The disclosures by an enterprise pertaining to this standard requires that in the statement of profit and loss, the expense relating to a provision may be presented net of the amount recognized for a reimbursement, the carrying amount at the beginning and end of the period, and amounts used, that is incurred and charged against the provision.